Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and joining me is my colleague here.
Hello there, I am Yatin Mota.
Well, of course, Yatin, we started on an iffy note. We reclaimed that 24,400 mark, but once again we fizzled out in the second half of the session and ended below that level, although it was a flattish close. So no big worries. Of course, over the weekend there were jitters that Hindenburg's latest allegations against the sitting SEBI chairman could roil sentiment, but that didn't happen. There was a rebuttal. There was a, the SEBI chairperson came out and refuted those allegations. AMFI came out and spoke in favor of the SEBI chairperson as well, and even SEBI itself released a statement, coming in support of the SEBI chairman. So, all the market experts have also said that, this was an attempt for character assassination as well as, a conspiracy of sorts, but this would not really derail the strength of the Indian market. So that thing out of the way, markets were cruising along, but profit booking kicked in the second half of the session, and which is why the Nifty ended the day in the red. The broader end of the markets were outperforming. Both the Nifty mid and small cap indices ended in the green, although there was a spike in volatility, 4% up for the India VIX index. You had the breadth that was tilted slightly in favor of the losers, but nothing really to worry about. PSU Banks, FMCG and autos were among the laggards today, but what did well was the private banking lot. The likes of HDFC Bank and Axis Bank stood out. Realty, metals and oil and gas were the other pockets of pockets that outperformed today. In terms of individual movers, ONGC was the top gainer, 2.5% gains coming in there. Hero Mota ahead of numbers, that stock was buzzing. Axis Bank, JSW Steel and Infosys. On the flip side, you had stocks like NTPC, of course, Adani Group stocks under some bit of pressure, but they were off days lows. Dr. Reddy's, Apollo Hospital, Britannia and the banking behemoth SBI were among the laggards. But broader end of the markets saw a lot of action in terms of stock-specific movement, lot of result reactions today, Yatin.
Absolutely, and the good part about today's market was, despite market is ending by 20 points lower, the advance decline ratio was almost 1:1. So a lot of stock-specific action is what we could see on the Lal Street. In fact, Realty as well as metal stocks were outperforming in trade. And if you look at the stocks which were moving in trade, clearly we had Suzlon and Inox Wind, both of these stocks moving well. Suzlon was up 5%, locked in upper circuit, and Inox Wind nearly 20% higher post that quarterly numbers. And also Inox Green, another company of Inox Wind, which got demerged a few years back, that also saw some price and volume action. Apart from that, stocks like RVNL, Voltas, Jubilant Foodworks reacted to earnings. In fact, Voltas, despite the weakness in the UCP segment, saw 10% gains coming in. Jubilant Foodworks, strong management commentary, good numbers, stock was up nearly 10% in trade. What was not doing well is the likes of Sun TV, Balkrishna Industries, BDL, and they reported a quarterly loss, Nandita. And clearly the expectations were running high, and on the back of disappointing numbers, BDL, that stock saw some hammering, 5% down for that one. LIC also, that stock saw some fall of nearly 5% profit taking seen there. But yes, a lot of stock specific action. Stocks like Voltas, Jubilant Food, HFCL hitting those 52-week highs.
That's correct, Yatin. Then let's quickly dive into all the stocks that are on our radar. Most of them are result reactions, no points in guessing. Balkrishna Industries was one, Yatin. That stock was down somewhere around 7% or thereabouts. The management commentary was pretty weak and the stock was clearly reacting to that. The stock did drop to a 1-month low after Citi, brokerage house Citi, has reduced its target price on the stock. If you look at the quarterly numbers first, profit rose 47%. Revenues from operations were up somewhere around 25.5% or thereabouts on a YY basis. But it's a cautious commentary from the management in terms of cost pressures as well as demand. These are some of the factors that weighed in on sentiment. The management has clearly said that they just see minor sales volume growth in FY25. They expect tepid demand environment due to macro challenges, and they will be striving to maintain EBITDA margin around last year's level of somewhere around 24.8%, which is less than 25%. At the end user level, the demand is pretty weak. The channel inventory is also seen increasing. Citi has also taken note of the management commentary. As I was mentioning, they have cut the target price to 2,150 from 2,300 earlier, which signifies or which implies a 29% downside from Friday's close price. Citi has said that, of course, management is expecting a 2 to 3% rise in raw material costs, which it cannot substantially pass on to customers because of weak demand. Because of this, of course, there will be potential headwind to margins, and which is why Citi has cut the net profit estimates by almost 10% for FY25. The company has also announced a capex of somewhere around 1300 crore rupees for the Bhuj facility. That's of course driven by the success and acceptance of its off-the-road range of tires. If you look at some of the other brokerages, even Motilal Oswal has pointed out that the freight rates or freight costs rather could go up by 8 to 9% of revenue in the second quarter itself due to the turbulence in the Red Sea. The crisis could weigh in on the company's performance as well. It has maintained a neutral rating. Target price is at 2,770 rupees per share. Lastly, Nomura, even that brokerage is neutral on the stock. Target price is at 3,115 rupees per share. It has noted that the first quarter EBITDA is ahead of estimates. But weak global demand is likely to delay the recovery. However, it also points out that this factor that the recovery could be delayed is already priced into the valuations. But if you look at the stock performance, Yatin, on a YTD basis, nothing really great, because 10% up move in a year when the broader end of the markets and the headline indices have done so well.
Correct.
A 10% YTD gain really doesn't enthuse so much. So of course commentary remains weak, and future outlook is also weak. So that's why the stock saw so much selling pressure.
I think the export market demand clearly is a concern as of now, because the macros are not looking really very well, and probably the earnings call reflects that kind of weakness in the overall business prospects as well. But what was not doing well after hitting a multi-year high was Alkem Laboratories, as the management also guided from some kind of tepidness in the overall margin guidance. Jefferies has an underperformed call on Alkem Laboratories with a target of 5,080. Now Q1 saw very good margin expansion. EBITDA level was in excess of 20%. But from here on, the management has indicated that higher operating cost probably would wane for the margins. In fact, they have given guidance of nearly 18% for FY25, despite the fact that they have done exceedingly well on the operating performance with a 4% kind of R&D cost. Now, despite a strong Q1, the management has retained the EBITDA margin guidance. Also, if you look at the higher OPEX, most of the brokerages have cut their own earnings estimate. For example, Jefferies has cut the earnings estimate by nearly 18%, and probably because of that, we have seen some bit of pressure on the stock also, which was down 2% after opening firm in trade today. In fact, the company's growth will remain below peers, and margin normalization is some time away. Probably the near-term OPEX will weigh on the stock price, and that is the reason why we saw some stock reaction on the negative side post the strong opening and good earnings, in fact. So that is the stock of Alkem on your screens, clearly looking slightly weaker in trade, ending the day lower by nearly 2%.
Well, that was about Alkem Labs, but one stock that saw lip smacking gains today was Jubilant Food, right? Of course, good set of numbers. If you compare it with peers, the performance was much better. Shares hit a 31-month high in trade today, and it has outperformed its peers in the first quarter. Reported an inline set of numbers. Imagine reporting channel like for like also saw a growth of somewhere around 12% or thereabouts compared to the same quarter last year. Same store sales growth was much better than peers. If you look at Westlife Food World, that saw almost 7% decline in same store sales growth. Pizza Hut saw a 7 to 9% fall. You had KFC also that saw a decline of 6 to 7%. In such a scenario, Jubilant has reported a positive same store sales growth, and that's something that was cheered. Of course, dine-in business saw some decline on a YOY basis, but on a quarter-on-quarter basis, it saw an improvement. The Q1 delivery business also saw revenue growth of 15.5%. New customer acquisition has been strong at 32% in the first quarter on a YOY basis. And the non-Domino's portion of the business has also started performing for Jubilant. It has opened 8 Popeyes store, 5 Hong store in the first quarter, and the company plans to add somewhere around 180 Domino's stores and 20 to 25 Hong stores in India going forward. In fact, its Domino's app also saw a record high monthly users of 12 million customers. And the company is, of course, also focusing in on improving the dine-in like-for-like going forward. It has introduced a 4-course meal, Yatin, at 99 rupees to generate footfalls during lunch hours. So all these initiatives that the company has taken, brokerages believe that this will improve the like-for-like going forward. Let's see what brokerages are actually saying. Kotak is saying that Domino's like-for-like growth is encouraging, but it's driven by waiver of delivery fees.
Correct.
So it needs to see more improvement going forward. It says that the company is moving in the right direction, but we need better valuations and a decisive recovery in the QSR pizza space to actually turn constructive on the stock. It has maintained a reduced rating. Target price is at 540 rupees. Next is Citi. It has a buy call, target price of 715. It has noted that operational performance has started, or in fact has continued to improve. Dine-in sales, of course, were weak YOY, but of course the quarterly sequential improvement that it has seen has found favor with Citi, and improvement in dine-in sales that the company is already working on will lead to like-for-like improvement. But okay, so aside of that, if you talk about the risks, Yatin, weak demand, increased competition in the pizza QSR space, as well as rising inflation pose some bit of risk. But analysts are confident that Jubilant will be able to maintain the current margin rates. Shares are up somewhere around 40% in the last 6 months. I remember, the QSR space was actually stuck in a range for quite some time. So in that sense, I think 40% gain in the last 6 months, it's quite decent.
Absolutely, and especially in a environment where inflation is high, footfalls are low, versus peer, Jubilant Food has done well. In fact, the management commentary was good, and I think the market has probably held the neck out and said that yes, whatever management is saying, let's believe that, and with the kind of dine-in initiatives plus the kind of LFL growth, which is like-for-like growth that they're looking at, probably keeps investors cheered, and the valuations also from the recent peaks have corrected well. So Jubilant Foods on your screen, ending the day high by nearly 9%.
Well, that's that. Then all the stocks on our list. But of course, one stock that will be in focus tomorrow would be Hero MotoCorp, Yatin. Will be reporting its numbers. We are, I think, approaching the end of the earnings season. After this, I think there won't be any more, domestic or global, domestic triggers to watch out for. So Hero Moto set to report a revenue growth in excess of 20% and a profit growth in excess of 40% on a YOY basis, driven by a robust volume growth as well as premiumization trends. Of course, that stock will be watched out for in tomorrow's session. And we'll, of course, be back with opening bell at 9 a.m. With all your queries and all the stocks that will be in focus. So don't forget to tune in for that. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Have a great evening and rest up. Thank you.